joining us for our second. All right. Oh, I gotta slow down.
Can you start?
Oh, my
I'm
goodness.
sorry.
That's okay. Welcome. My name is Giselle DeTumer, and I'm a co-chair for the DEI committee. I want to thank you all for joining us for our second homeownership webinar today, where we're going to cover financial wellness for homeownership. We're going to have a commercial by Hancock Whitney. I'm sorry, okay. She ready?
One moment.
Home, for me, is the place you remember years and years and years later, the place where your childhood memories are founded. When my kids look back on their childhood memories, I don't want that to have taken place in a tiny apartment. My name is Madison.
Hi, my name is Vanessa.
Hi, my name is Brittany.
Hey, I'm Dario.
I'm from Florida originally, moved to New Orleans about 12 years ago, moved to Honduras for a year, and that's where I met Vanessa. Brought them back to New Orleans in 2017, and we've been trying to make a home for ourselves ever since. So we signed the papers March 2nd, 2021. We didn't tell the kids anything because we didn't want their hearts to be broken if we found out that it wasn't going to work. And then we told them we were going to go visit a house just to see if we were interested in buying it. So we stopped by this house, had the realtor here let us in. She asked us if we wanted it, and then she handed me the keys. And that's when we told the kids that we had bought a house.
The exciting part of having my own room is being able to have my own place to hang out.
Our Hancock Whitney banker helped us through every step of the process. She was always available for a phone call, and she made it really, really easy through the online portal. I was doing it while I was at work, which made it so much easier for us. We would absolutely recommend Hancock Whitney to our friends or family, anyone who's trying to buy a house, doesn't think that it's possible. I would definitely direct them to Hancock Whitney because they made it possible for us.
Alrighty, our first speaker today will be Travis Moore. He's the Vice President, Business Banker for Hancock Whitney. Travis.
Hi, thank you. Can I share my screen with you guys?
Make sure. Okay, you go ahead and try. Oh, no, go ahead.
Alrighty, everyone. So just recently, my name is Travis Moore. I'm a business banker for Hancock Whitney. I've worked here for a little bit over 16 years, and I service the New Orleans area, doing pretty much all commercial related loans. But today I've come to talk to you guys about financial wellness. So just recently, the bank published a first-time home buyers guide for all prospective home buyers and also real estate agents. I'm more than sure everyone can probably benefit from this guide, which can be found on our website. And I'll give you guys a little bit more information later on once we get into it. So here are some top do's and don'ts. Let's go over the don'ts first. Of course, don't apply for new credit when you're looking to purchase a home. It's so many times that we've had clients applying to purchase their first home and they don't qualify because they want to purchase the new car. So I think everyone know that first rule of thumb. Secondly, don't go out there applying for credit cards either, because those inquiries can definitely impact your credit score negatively, and it can take you from a point where you qualify to you don't qualify anymore. Also, don't start looking at homes prior to knowing how much you're approved for. So if you're like me, I have this huge, this expensive taste, right? So if you have this expensive taste and it's out of your budget, typically when you find out, hey, I'm only approved for 150,000 or 200,000, it doesn't work. Or you find out that, hey, it's nothing that's in your personal goals of obtaining, and at that point you're not satisfied. So don't do that. Just wait. Also, don't assume you need a 20% down payment like most originators. Typically, there's a lot of programs out there that can get everyone possibly down payment assistance. and also closing cost assistance. So speak with your originators and make sure that you have an open, candid conversation and see if there's any programs that you qualify for. Also, don't make a buying decision without considering your needs and your wants. Some folks like to live these established, lavish lifestyles. Typically, I'll tell people, write down all of your expenses, your monthly expenses, and also put into on a piece of paper, jot it down and say, hey, how much can you really afford? Because just because the bank is telling you you can afford a $1,500 monthly payment on a mortgage, can you typically really afford it with your insurance, utilities, and things like that? So make sure you write everything down on a piece of paper and kind of get to understanding what you really want to achieve at the end is your end goal. Your dues, pay down any existing debt if possible, and save as much money as you possibly can because those rainy days could come around and you don't want to be stuck with, say for instance, you have maybe damage to the property after a rainstorm or anything like that insurance won't cover. Also, get pre-qualified for a mortgage so you know how much you can borrow. Knowing that you can afford in advance make the shopping experience much easier, like I previously mentioned. Understand your mortgage options and costs. Again, keep a very open, candid conversation with your originator and see if there's anything out there that you may qualify for. Also, understanding your credit. I suggest everyone pull their credit report at least once a year to see if there's any errors on their credit report and also to see where you stand. Are you financially able to purchase a home? Will the bank lend to you? As you see right there in our buyer's guide, it gives you your credit score ratings from exceptional to poor. So understand, where do you stand in front of the lender? Make sure the lender understands that, hey, I may not be great right now, but just work with me and I'm serious about purchasing a home, so that they can make sure they hold your hand and get you where you need to be in order to acquire. Because this is the largest purchase you're going to make in your life. So that's definitely important. Also, and if you're not currently at a point where you can purchase a home due to your credit, at Hancock Whitney, we do offer different type of products, including secure credit cards, to help you establish your credit and also to make sure that if you're not there, it'll get you there. So again, having the conversation with your lenders. In addition, we currently have different ways of obtaining credit right now. So we have a special going on with our home equity line of credits. We have an MMCT loan, which stands for Minority Majority Census Tract. And at this moment, for our home equity line of credits, we are only charging 2.99% for the first 6 months on all MMCT loans. And that can be discovered, if you qualify, by your lender. And we will pay all closing costs as well, in addition to that. So we'll pay all closing costs, and you get an interest rate of 2.99 for the first 6 months. Thereafter, there is a variable rate. And also, so in a bit as a benefit of home ownership, those MNC, if you needed to like obtain capital, doing a home equity line of credit is one way of accessing cash in your house. If you don't have cash right now and you're trying to plan for a trip or you're paying for education, anything, you can obtain a line of credit, and you can do those things by pledging your property. So this buyer guide has a lot more information, and I know I don't have much time to go over everything, but this can be found on Nomar's website on their banner, or you can go to HancockWhitney.com. What I can do is just share the link for everyone so you guys can all access it and kind of go through it. It's some very helpful information in there that you can share with your clients as well.
We can hold our questions for him.
And if you have any questions, just let me know. How do I stop sharing? Oh, it's over here.
So we just tell them, we're gonna hold the questions for him. So everybody.
Thanks, Travis. That was great.
We're holding on questions until the end, but thank you, Travis.
My pleasure.
And
You're next.
okay. Thank you. Very good information. I have the esteemed pleasure of introducing our speaker. She has more than 26 years of experience as a financial and mortgage professional. Sean Rogers is dedicated to helping individuals and family to achieve their dreams through business ownership and home ownership. As an assistant vice president community lender at Ray River Bank, Sean utilized her extensive knowledge and expertise to guide clients through the complexity of mortgage lending and business funding. Her unwavering commitment has allowed her to help over 10,500 individual families and business owners to build wealth through real estate. Sean's passion knows no boundary. Beyond finance, she served as the vice president of Inspire NOLA Charter School Board for 11 years, as an ordained pastor, an entrepreneur, and a native of New Orleans. I'd like to introduce and present to others Sean Rogers.
Well, hello, everyone. I'm super excited about being here today. So I want to thank, of course, Nomar. I want to thank our partners that are here, our any other speakers that are going to be speaking. I just want to say great big good afternoon. I get super excited about talking about financial literacy, home ownership, and everything that is attached to it. So I'm super excited that I was asked to come and share on today. Thank you, Travis, because the information that you gave is super important to the process that many of us have to guide our clients through. Home ownership in Louisiana, believe it or not, is absolutely phenomenal because we are one of the #1 states, and Mary can probably correct me if I'm wrong, in home ownership, but yet also one of the states that have the lowest income levels. So in that regard, for us to even be in the number and have individuals with less income to work with is phenomenal. And I believe that as professionals, we should applaud ourselves. Hats off to us as well, because that means we are helping our communities. We are helping working people become homeowners, which is an American dream for many, many people. And not just homeowners, but we help a lot of investors. We help a lot of business owners as well realize the dream that they have or the vision that they have for their business. So once again, my name is Sean Rogers. I am the Assistant Vice President, Community Lender for New Orleans and the Greater New Orleans area with Red River Bank. Red River Bank is a Louisiana bank, a community bank. We are headquartered in Alexandria. We began in 1999, and we have actually 28 branches throughout the state. We're a little new to the New Orleans area because now we are coming south to help so many individuals as well and to service our clients. Our newest branch just opened, believe it or not, last week on Veterans. So we are excited about that on Veterans near Bonneville. And then I'm located at 700 Baronne here in New Orleans, downtown, across from Rouse's. I usually like to give a landmark. So that's where I'm located. So I invite many of you, of course, to come by, see us, and see what we're all about. But we are a full service bank, and we are super committed to community lending, which is one of our absolute loves in the area in which I focus on for Red River. We also have a red loan, what's called a red loan, and so many other loans as well, like many of our partners that are on today. But we have a specific red loan, and that red loan is targeted to minority and majority neighborhoods We believe that if we target better programs for those neighborhoods, then we will help in the rebuilding of them, strengthening of them. And so our red loan is 100% loan. It is no down payment. And when a person buys in those minority majority areas, we also have an additional grant of $2,500 that family is awarded, or that individual is awarded, to help out with closing costs or moving costs or whatever it is they need to do. If they need to get new appliances or different things like that, that red loan comes with an additional grant. The beauty of that grant is that the beauty of that loan is that an individual or family can make up to $115,000 a year. So it is not specifically geared toward low-income families. I know a lot of our programs are income-based. They are geared toward the lower to moderate income, 80% or below. But this particular loan, we have decided to try to reach more middle-class families as well. And then, of course, this is a beauty of that loan as well. You can use it up to a 2-unit property. Here in the New Orleans area only, we were able to get approval from our bank board to open that up, because we understand that New Orleans is a different model from the rest of the state. And so for that, we are super, super excited about that. And then that loan, the person has to have at least a 640 or above in credit score. I'm super excited about that red loan. And not only that, just super excited about how our state really puts in place ways to help families and help individuals buy. We have so many programs throughout the state, as you know, many of you know already, but we have, of course, our soft seconds. We have soft seconds throughout the state through LAC. We have our New Orleans soft second. I'm not sure right now if Jefferson has theirs open, but it does come open quite often. And then, of course, we have so many different grants and different percentages that can be assisted, people can be assisted with for their closing costs or their down payment. And what I love about our area, and I believe that causes us to be number one in homeownership, is that we actually assist our clients to get through the process of it, right? And so one of the things that we have learned throughout the last few years, especially during the pandemic, some people, their credit kind of went to the side. Their credit kind of, got some blemishes, or something happened, because a lot of our people in our area are service-based people, which means when the world shut down, so did their job, so did their income. And so what we're finding now is that before they can actually reach the level of home ownership, they may need a little help. They may need some counseling. They may need some direction on how to clear their credit, how to get a better credit profile. And that is super important, especially for families that are trying to get back on their feet. They may have the money, but now they don't have the credit. And so credit is super important as it relates to how do they clear these things. A lot of times they don't know that there are ways that they can write to their lenders that they may have been late with or defaulted with. And that is something that many of us as loan officers do. We sit down with our clients, we go over their credit profiles, and we give them a blueprint of where they are now and what they need to do to actually be able to sign that contract and get to the table and receive their keys. And so financial literacy is super important, which is one of the things that we really focus on at Red River. We have a program called Red River University. It is located on our website. Anyone can use it just by going to our website. We have financial literacy information and education where people can go through modules. They can read up a lot of different information, whether it's for credit or whether it's for savings or how to use their bank accounts or whatever it is that they need to get information for. We have all the information on our website for different age groups as well. And so financial literacy, we believe, is not just for the homeowner, but it's for the entire family. It's letting them know that, hey, we are here for you. And not only that, it's important that people become bankable, not just using Red River, but for all of us and all of our partners who are on today. It's super important that our communities understand banking and how their money works. So it's super important as it relates to financial literacy. A lot of times when someone comes in to do an application for home ownership, they don't know the difference between them having to pay a down payment and that closing costs are different, right? And so these things are very important that they understand that when you're buying a house, they'll come in and say, well, I have my down payment, but then they don't have the closing costs because they didn't understand that those are two different things and those are two different animals. And so it's super important just to know how money works and how home ownership works. I love the fact that we are in June and this is home ownership month, and there are so many things that are going on this month. I'm honored that Nomar is taking a part in making and really pushing that each and every week. Last week was awesome, just to hear the event on last week. But on today, I wanted to, of course, be able to have a little interaction if possible. If you all have any questions as it relates to mortgage, credit, most programs require a client to have a 640 credit score. Some there are a few that will require only a 620. We also facilitate the CAFA, which is like a grant program, very similar to LEC as well. They do allow lower credit scores. So it's important to reach out, ask questions. You may have a client that, has a particular profile and one or two things may not fit our normal grant programs. We may have something that you can use or even come up with a blueprint of something where we can place them in a particular loan that will work for them. So I'm one of those people that if one thing doesn't work, I'm going to search till one does. So hopefully there will be something out there for that person or that family, because it's so important when a family is ready to buy. It is important for us to really be able to help them through the steps and they not get discouraged that, oh, I can't do this, or, oh, I may not qualify for this. Or, sometimes we can even get exceptions, believe it or not, with the grant programs, depending on what the situation is. But even now with FHA, our government programs, it's not as hard as before to overcome collections that are on their credit report. There are items with collection that sometimes the underwriter will allow to not be satisfied and still yet close on their loan. So every single person and every single profile is like a thumbprint. Your thumbprint is yours throughout the world. There's not another one like it. And so I like to think about that when I'm looking at someone's profile or their credit, because everybody is facing something different. It's important that they understand how to handle their mortgage note once they get the house. And so even though a lot of times they go through the home buyer training and all of that, but when we as professionals actually sit across from them and we're actually able to speak with them and make a relationship with them, it's more important we have their one-on-one attention. And so from there, we're able to get more information about their financial situation, how they're handling things, and then be able to steer them in those directions. Now, important thing too is most times the number one is credit. The number one is credit. A lot of times they don't know where to go to get, per se, late payments off that they didn't do, or if there's a collection that shouldn't be on there, if there are any health or medical collections on there. First of all, the law now states that medical collections up to a particular amount cannot be shown on a credit report. So if you have any clients that things like that are happening, definitely you want to get with your loan officer so that they can help them clear those things. Because of course we have the opportunity to clear things faster than the client has, of course, because we have direct access, right, to the credit bureaus. So that's something that I believe is a plus, especially when you're trying to, of course, sign a contract. They found a property and now they have some things that need to be taken care of, right? Many times we as loan officers, we have the ability, right, faster to get things satisfied or cleared if they have paid receipts or whatever the case. So we find that credit is one of the number one things. And the other number one thing is assets. Assets, how much do they have in the bank? How much do they have for down payment? How much do they have for closing costs? How do they receive their money? A lot of times right now, people are receiving different streams of money. They are receiving cash money because they're doing side jobs, side hustles, all different types of things. And even with that, it takes financial literacy so that they understand how we look at that as a lender, right? How the bank looks at that and how their approval can be affected by that, affected by deposits being placed into their accounts, right? And so it's important for us as professionals to remember these things, to ask these key questions so that our deals, first of all, are not getting delayed, right? And our deals are not getting stopped in the middle of an underwriting process because we are asking the questions up front. Right. So that's super important that we work together as lenders, that we work together as realtors, as a team, so that we are making a seamless and as easy as possible process for our clients. I also wanted to talk about the Federal Home Loan Bank of Dallas. Right now, of course, they're out of the $20,000 grant, but that is something for us to think about each year because they put out a very large amount of money for our areas for grants on top of the different grants that we have and get from our partners like LAC. So those grants can be stacked. So those are other things that can happen. And please remember that even if a person is getting a soft second, they can not only get the soft second, but sometimes there's an additional grant that they can actually layer with that, right? To help them as well. Depending on what the guideline is and depending on, of course, their situation. There are other things as well that can be helped as it relates to using the USDA loan. We know that, of course, is territorial. It is based on where that house is located. But if you're using USDA with no money down, you can also couple it with grants. That is a winner. That is a winner for your client. That is a winner for your client. So there's so many other resources that you can use for your clients to get them to the table as well. I'm super excited because of the red loan with the 2 unit, y'all, because that was a biggie for us to get that approval for the New Orleans area specifically. So now I didn't want to go over my time. I'm not sure where I am because I just started talking. But but if anyone has any questions, go ahead and put some questions in the chat. Anything concerning lending.
We're going to actually ask you the question. We're going to actually ask
Okay.
you.
Oh, great.
That way you wouldn't have to worry about reading them.
Awesome.
Well, thank you for the information, and it is a wealth of knowledge. But the one question we had was about the credit report. You say that as a lender, you guys can help them with their credit report. Is it an extra fee to rerun the credit report once they get something removed from their credit report?
It is not for us. Now, every lender works differently. Most banks do not charge for the credit report. Some mortgage companies may charge for the credit report, but we do not. We do not charge for that. Now, if we are requesting a rapid rescore, that's different. That is,
Okay.
there is a charge for that, and it's per bureau, and it's per item per bureau. So and that each lender will have a different, you know, whatever their charge is. But I will say that we are not allowed to charge more than the credit bureau is charging. So they receive the exact charge from the credit bureau. So there's no, you know, the bank does not make, or the lender does not make any additional monies from rescoring.
Okay, thank you.
Mhm.
And then the other question was about the rate loan. Is that territorial? And is that for someone buying up, or it's only for first-time home buyers?
So it is for minority majority neighborhoods. And what we do is we look up the census tract to see where that house is located. And if it is 50% or higher as a percentage of minority majorities living in that area, then it qualifies for that loan, and it qualifies for the $2,500 grant, additional grant. What was your other question? Sorry.
Is it for a first-time home buyer, or can you use it for a buyer that's moving up?
So I believe you can use it for a buyer that is moving up, but that buyer must be selling the home they're in. It's not for them to turn their current home into an investment and then, yeah, but yeah.
And is that on all mortgages, FHA conventional? Does it?
Yes.
Which
It
product are
works
you
with, absolutely. It works with government and it works with conventional, as well as USDA. Well, USDA doesn't matter because it's 100%, but yeah. Sorry.
Okay, thank you. And also on the collection, if there's collection on the credit report, you're saying sometime the underwriter may allow that. Can you give us an example where it may be allowable?
So depending on the type it is, of course, and the amount. So collectively, usually collections can stay on and we still get approvals up to $2,500. Okay, anything over that, usually there's going to be a requirement of them to satisfy or to take care, you know, it to be deleted. But usually collections are handled on a case-by-case basis based on a person's entire profile, their credit profile, as well as their, you know, work history, the entire profile, if it's strengthened or not. So that's how it's usually looked at. And then, of course, it's at the discretion of the underwriter.
With that second
but we
part,
have definitely seen a lot of more leniency with that.
okay, with that, if we could get past the underwriter at the bank, is it acceptable for the agency that may be giving the second money?
So that's a different animal, because of course they have to approve their portion, right, for the person to get their monies. I recently have not seen where they will question the original underwriter's approval unless there's something that's totally askew. So we would have to handle that by case because I can't speak for the agency. However, can you hear me?
Yeah, Sean,
Yes.
I can tell you,
Okay.
I can help you with that question as well, because
Oh, sure.
there's the agencies are only reviewing the file for their compliance, to ensure that the person is compliant with their program guidelines. That is it. They leave the first mortgage, the credit file to the lender. There's never an issue where they will say, oh, wait a minute, we're not going to accept this because it doesn't meet our credit guidelines. As long as there's an AUS approval on our end, and as long as the borrower actually meets their program guidelines, there's never been any push and pull with lenders in general and the agency regarding, you know, credit issues related to the file. They really leave that to the lender.
Okay,
Okay,
great.
that's,
Thank
that's
you so
good.
much.
That's good to know. That's good to know. Thank you. And then we have one for self-employed entrepreneurship. We know that their tax returns are what you're gonna look for, and is it 2 years of tax return?
Yes, it is 2 years tax return, and it is
Okay.
the adjusted gross income. And we look at the bottom line of the Schedule C as well. However, there are items on the Schedule C, depending on how that person has filed, that can be counted and credited back in as income. So it's very important that the self-employed person gets with a lender that understands how those things are calculated properly so that they are qualified properly.
Okay, all right, and then when you look at that self-employed person, you're looking at bank deposit, how many months of bank deposit statement you're looking for?
Yeah, she meant.
We are also looking at 2 months bank statements.
Well,
Now
what's
with
that?
self-employed, sometimes depending on the structure of their company and how they receive their money, we will require not only their business, but their personal as well. So they will sometimes have to submit their personal bank statements as well as business bank statements.
Hey, Sean, I'll ask a question. Hi, everybody doing? Pamela Landers, VP of Ariba. My question was the bank statement loans. Does the red loan apply as well to a entrepreneur's bank statement loan instead of the W-2s?
No, it does not. A bank
Okay.
statement loan is actually, it's not a regular mortgage product. It is more of an alternative mortgage product. So that's something that actually my bank does not offer the bank statement program at this time. Usually, most times it will be a mortgage company that offers that. Very few banks will offer that type of program. But I can let you know what some of the guidelines are for it. Usually a bank statement program is going to require 24 months bank statements. And what they're going to do is average all of the deposits that have been made for 24 months. And sometimes they will require their personal bank statements as well, depending on the income and how it's handled, and how the entrepreneur is handling those bank statements. So that's pretty much the gist of that type of loan. And that type of loan, I don't want to say it's considered subprime because it's not in most cases, but it can be. And it's usually offered by hard money lenders.
Okay, thank you. Then we had another question. How and when do Federal Home Bank of Dallas money become available?
So usually it becomes available at the beginning of the year. It funnels down through partners in our area. So you would have to find a bank partner that is an approved partner of Federal Home Loan Bank. There are also other programs through that bank for our area, such as the Fortified Roof program. So there is a Fortified Roof program that our bank facilitates that as well. If you guys have, clients that you may have placed them in a house and they may need that, just give me a call and I will place you with the right person with our bank that handles that. That is a wonderful program. And even those who may be buying a home and the roof may be getting old, and they'll be able to, after purchasing it, apply for the Fortified Roof program. And depending on, what the guidelines are for them. So that there are so many other programs, not just for down payment assistance, but other types of assistance that Federal Home Loan Bank of Dallas does in our area as well. There is a repair program as well, I believe for veterans or seniors. So there's some other programs as well. So if someone's interested in that, you can reach out to me and I will definitely direct you to the right person. But there are other resources for homeowners as well.
Thank you. We have one more question for you, and then we have a couple of questions for Hancock, Whitney, Travis.
So,
Gigi,
on your federal home loan bank for sales, what is the income restriction on that? Is it capped at 80% of AMI, or can you go higher?
It is capped at 80% currently.
Okay, and is it used for just closing costs, or is it also used for down payment?
It can be for either. It can be for both.
well, we thank you for all your knowledge, and I think, Travis, we just have, 2 questions, I think 3 questions for you. You talked about the secure credit card for a client. When they get ready to do that, do you pull a consumer credit report? And is there a challenge for them if they have any collections on that credit report?
So yes, we will pull an Equifax credit report on all secured credit cards. In the event there is something negative on there, we will address it at that moment. But typically we would like for them to address it prior to coming, to have no derogatory information in their credit file, at least, or they're trying. But if there's like one collection item, I'm sure we can probably mitigate that and get the secure credit card in place for them.
Okay, thank you.
Sure.
And then with the line of credit for the homeowner, is there a credit score on that when you're looking at the line of credit or the HELOC? Is there a minimum
Credit score?
Credit score?
So typically the minimum credit score is like a 640. But because it's secure with your primary residence, they do take a little bit more leniency, especially in the MMCT, because we do have an initiative right now to lend in our majority minority census tract areas. So we will take all of those things in consideration prior to rendering a decision.
Okay, thank you. And I think that's it for questions. If anybody else have anything.
And that's 2.99% for 6 months, right, Travis?
Yes, 2.99% for 6 months, for the first 6 months. There's a variable rate after that, and we pay all closing costs. So that's something that you guys could keep in your back pocket, tell your clients, take advantage of it. As you know, the interest that you pay on there is tax deductible, so definitely consult your CPA or your tax preparer on that.
Great. Ashton, we turn it over to you.
Okay, so next, I'm going to introduce.
Sorry.
Oh, sorry.
Can everyone hear me?
Yeah, that's how this
Okay, can you hear me now? Okay. We had a feedback. Okay, so I'm going to introduce Mo Moore, who is the education coordinator with Louisiana Fair Housing Action Center. And they're here to speak with us regarding the LGBTQ plus community and the housing issues. So, make sure. Yeah. Hello, Mo.
Hello, how are you?
Hey, Mo.
Hi, so yes, I'm the education coordinator for Louisiana Fair Housing, and I do have a presentation that I can share. And so, yes. So I'm going to be talking a little bit about sex discrimination in housing. And we're going to cover pretty much the basics of fair housing, but we're going to make it specific on sex discrimination. And so Louisiana Fair Housing is a private civil rights nonprofit dedicated to the eradication of housing discrimination in the state of Louisiana. And so we have 4 departments. We have enforcement, home ownership, counseling services, policy, and education outreach. And so enforcement, the enforcement department has lawyers who represent people who have experienced housing discrimination for free. And then we also do eviction defenses as well. With our home ownership counseling services, we do foreclosure prevention. And so people don't know that that's one of our resources, but it definitely is. In our policy department, we have people who work to get laws passed that protect people and advocate for housing accessibility. And then we have education and outreach, which is what I'm a part of. And so with my job, I go all over Louisiana and talk about fair housing and the rights and responsibilities within the act itself. And so when we think about the perfect house, I usually ask my clients, my participants, how many of you have already found your house? And if you haven't found your house, what would it look like? And so some people say, I want 4 closets, or I want a garage because I don't want to do any street parking, things like that. And then other people say, you know, I want to pass on my house to future generations. So people have different aspects of why they want to live in their homes. However, I tell them that it's not just about the house itself, it's about basically what's surrounding that house, what is around that environment. So that would include like the cost of the house, stores that are near the home, how much traffic it is in, especially in New Orleans, there's a lot of traffic. Is it safe? The size of the house? Is it well built? If it has a bad foundation, then the house can be either too hot or too cold, and you want to be comfortable in your home. Some people want friendly neighbors or not live in a flood zone, and that's really important to living in Louisiana. Is it near your job? And is it near public transportation if you don't have a car? So these are the things to consider when, and I tell my participants that, you know, you have to consider these things when finding a house. And so within the budget that we all have, can we get everything on our list? No, we have to make decisions based on our family's needs and priorities, and for ourselves as well. And so we usually have to compromise on things. However, we should not have to compromise on housing discrimination. And so talking a little bit about the 7 protected classes in the Fair Housing Act. So in 1968, race, religion, national origin, and color was introduced. In 1974, sex was introduced. And in 1988, disabilities and familiar status was introduced. And so I'm going to talk a little bit more in depth about sex discrimination and what constitutes as sex discrimination. And so sex discrimination is defined as discrimination against queer people would be a form of discrimination because a queer individual does not conform to gender stereotypes. And because they do not conform to gender stereotypes, they often get denied by landlords because they do not agree with their lifestyle. So that would be a form of sex discrimination. And so an example that we had, a case that we had was involved a couple in Colorado. And so the couple involved a transgender woman and a cisgender woman, and they were denied by a potential landlord the right to rent a home because of their unique lifestyle. The federal judge ruled that it was a sex discrimination case because it was making assumptions about the way that the couple should live based on their sex, i.e., people assigned female at birth should only be in a relationship with a man. And because that's not true, there's many different relationships, that should not be the case of not buying a home. Because the relationship is not a heteronormative one. And so we do our best in our organization to advocate for those and to let people know that if that is going on, to definitely let us know and to make a claim. We had another, we see some harassment cases as well with queer clients. And so what would be harassment? Harassment would be based on a membership in a protected class and is considered discrimination under the Fair Housing Act. So if they are discriminating against you based on your protected class, i.e. your sexual orientation or your gender identity, that would be considered sex discrimination. An example that we have of that is this was in New Orleans, and so a tenant was in the pool, relaxing, doing their thing. And the landlord told the tenant to get out of the pool. And the tenant was confused. The tenant filed a claim, and we discovered that the landlord had assumed that the tenant was HIV positive. Now, this is a wild assumption about a tenant based on their sexual orientation, number one, but then also if the client was HIV positive, that would be a form of disability discrimination. And so we were able to file that claim and we were able to win that case. So when it comes to these different forms of LGBTQ discrimination, we're able to take on those cases because we want people to be comfortable in their environment and in their dwellings. And so I put up a stat on LGBTQ discrimination in housing. And so this is a 2019 study. So I tried to find a recent one, but the one with the most collective stats were in 2019. And it was a representative data from 35 states that showed that 49.8% of US LGBT adults own their homes compared to 70.1% of non-LGBT adults. And so when you see these numbers, you're like, why is there a discrepancy? And it's because of this discrimination that we have, especially in the South, especially because we have a lot of rules and laws and regulations that restrict the LGBTQ people for gaining access to resources, medicine, and even housing. And so you see a lot of LGBT adults, teenagers being displaced because of these reasons. And so we try to advocate for housing, especially when it comes to LGBTQ youth and adults. And so our resources and what we do. So each case is different, and it is our job to help our clients figure out what options are best for them. And so our office is here to let any of our clients know the options and figures and options and choices that are the best plan to get them what they need / deserve. And so the outcome of that plan can be different based on the situation. So it can be from fixing the problem to an apology to financial compensation. It just depends on a combination of things, including your specific situation and what you want. And so some of those plans could include certain things that the judge can order in order to fix the hurt that has happened. So it can be financial compensation for additional expense caused by discrimination. It can be mental / emotional health care, monitoring for fair housing compliance, and fair housing training for housing providers. And so our goal is to make discrimination so expensive and so much of a hassle that landlords won't be able to do it. And our goal is to also get you the relief that tenants and clients need, and that we are ultimately here to educate people so no one has to experience housing discrimination, especially in Louisiana. And so our contact number is going to be here on our website. And it's going to be 504-596-2100. And our email is info@lafairhousing.org. And that is all that I have. Any questions? I see in the chat.
I didn't see any in the chat.
Okay.
Can you put that information in the chat?
Yeah, it's in there. But I did have, you already gave some great examples, I'll say that. I had giving any signs or red flags that you would consider discrimination, but you did give 2 great examples. I didn't know if you had any other specific examples you thought may be good to share. I know you gave 2 already. If you had any.
So I help out with the fair housing intakes. So I've had a client who was transgender and she wanted to buy a house, and well, she wanted to rent an apartment. And so they kept misgendering her, and ultimately they denied her application, and she was on the verge of being homeless. And so we were able to take on that case, and she was able to get compensation, so where she was able to move into an apartment that would accept her in her gender identity. So that was a sad case because she had no options, and that's kind of what you experience when you listen to people and their stories. It's not just these stats, and it's not just these examples that you just read about and that you present on. You hear these stories and you hear the situations that people are in. And so our goal as an organization is to make sure that people, just because of their gender identity, just because of their sexual orientation, does not have to go through that possibility of being homeless, or have the possibility of being in a situation that they don't have the choice to be in. Because at the end of the day, our organization is all about choice. You should decide where you want to be. You should have all the options of where you want to live. You should not have the limitations based on your protected class.
And I think that's a great example of how your organization was able to help. So thank you for sharing that.
Of course.
I think we do have a question here.
I have a question. You talked about the breakdown of home ownership for LGBT.
So I'm kind of curious, did you guys do a deeper dive in what that looks like demographically?
So it,
Huge issue of Black ownership. So I'm just kind of curious, what are the demographics for those that do want there?
and so we haven't had an audit, a recent audit yet on the LGBTQ population in New Orleans yet, because we are doing a lot of, so we're currently doing an audit on disabilities and service animals, and we're doing an audit on that. But how we would be able to do that would be testing. So we do a lot of comparative testing. So we have testers in pretty much every protected class. So we have testers who focus on race, sexual orientation, disability, familial status. And so I don't have the specific details on that, but we do have a testing coordinator named Michelle. She's amazing. And she coordinates all of the testing that we do. And so if I'm able to call her, shoot her email and see that stats, I could do so. But we have it in every scenario. And so we always do comparative testing on, like, for an example, with sex discrimination, if we have two people who are the same, basically, they have the same occupation, they have the same credit score, they have the same salary, everything's the same, but their sexual orientation is different. And that constantly happens with a certain organization, with a certain real estate agency or a property. We're able to see that difference. So it really is case by case. But I would have to talk to my testing coordinator to see the stats on that.
No, I think you're really, what I was trying to understand is like, of that 49%, how many are African American households? How many are Hispanic households?
Are you talking, you're talking about the intersection of the two,
Yes.
like of race and.
And those stats were from 2019. So
Yeah. It's honestly, and I do work with LGBT communities in New Orleans. So and I can tell you, when I did my thesis with doing a lot of LGBTQ work, it is hard to get those stats because no one reports on it. Because the thing about it is just like, how are you able to report that? And are they actually going to take it seriously? And so it is so hard to get statistics on it. And it's so hard to get the statistics on it for the simple fact of a lot of people aren't doing the research. That's kind of the simple fact of it, especially with the intersectionality of African Americans in queer community. It's not really studied. When I did my research on the African American and queer community in New Orleans, that was hard to get that, hard to get those stats. I had to do the work to do interview by interview by interview in order to get more qualitative data, because there weren't enough quantitative data, especially recent quantitative data. So it is important for us to actually advocate and talk about this, because there's not enough studies, there's not enough statistics, especially when it talks about the intersectionality of race and sexuality. So that's like the answer in a nutshell, is that there's not enough data because not a lot of people are talking about it. And so that is something that I am striving as, not only as an education coordinator, but also as a Black feminist scholar, that I am trying to figure out the stats on a whole bunch of things when it comes to Black and queer individuals in New Orleans.
So these are just Louisiana and New Orleans stats versus nationwide.
So the 2019 study was a was a United States, was a national study because they had representative data from 35 states. And so to get that in Louisiana, that would have to be, and you can get it from like an article on anything, but like to get like a peer-reviewed scholarly article on New Orleans, Black youth and the statistics on it, that's gonna be a little hard. But we definitely are trying our best to do a whole bunch of stats on different things like, so right now we're doing disabilities, and service dogs and, you know, how many people are getting denied because of their service dogs. And people who have certain physical and mental disabilities. And so that is something that we are really striving to incorporate when we do our testing, when we're doing our audits. We're working on building stats on LGBTQ youth and adults when it pertains to housing discrimination.
I have a question on your testing. You do testing, I know you talk about homes and apartments, but are you testing lenders?
We're not testing lenders yet. It's just because with our organization, we're very much so tenant-based, that tenant and renters based, that we focus more on the tenants and renters and the homeowners first. And then when it comes to lenders and things like that, we want to consider them. But we are mainly focused on renters and homeowners.
Okay, and I know we're getting close on time, so I want to ask you a question. What can we as realtors do to ensure that we are being inclusive with our clients? When we have clients that are in the LGBTQ plus communities, we do have the code of ethics that we follow, so we just want to make sure that we're being inclusive in the things that you share that you guys face. I think that's a great, way to end also. What things can we focus on and make sure that we're being inclusive?
Absolutely. I think first asking somebody their gender, like asking their pronouns. I remember when because we do our intakes and we have to ask their pronouns, and so doing that for the first time and then having somebody say, no one has asked me that before, and they got emotional on the phone. I'm not good with emotions, so I was like, okay. But that was something that was very important to them, that they were seen. And just asking them, what do they need? What do you need in your place? Do you want to be, what neighborhoods do you want to be? What resources do you need? Whether it is for entertainment, whether it's for necessity, things of what do you need? Because I think with a lot of minorities when it comes to race and sexuality, we have a lot of steering issues where you're steering them to one area, that you're steering them to this area. I've heard of some queer folks saying that they were steered towards the Bywater because it's a more queer area, and they were like, I want to be in Uptown. These are two different areas. And so asking them what they need, what areas that they want to be in, what neighborhood do they want to be in, and what are some things that they would need and want in order to enjoy and maintain their dwelling. So giving them the power of choice at the end of the day. And if they can afford it,
Let them have it.
Let them have it.
Okay, that's wonderful. Thank you so much for your time.
Of
Thank you.
course. Thank you so much for inviting me.
Thank you.
Thanks, everybody. That concludes our webinar today. So I want to thank all of our speakers, Travis Moore, Sean Rogers, and Momar.
One more.
No more. For enlightening us on the LGBTQ plus community and how we can better serve our clients. So once again, thanks for participating in our webinar today on financial wellness. We do have a third one coming up on the 27th, where we're gonna talk about let's get moving. So we've already covered preparing for home ownership. We've discussed the financial wellness, and now we're gonna get moving in our third webinar on the 27th. Thank you, guys.
Lunch and learn.
Oh, yeah, forgot our lunch and learn is on the 26th, so please join us in person. We will have catering. Who's our catering? So we will have a delicious lunch, so please come out. And that'll be from 11:30 to 1:30. Thank you, guys.
Thank you.
Thank you.